what is the impact of an election year on the stock market and investments? Well, very lucky today here on the Phronesis Perspective to talk about just that with my good friend, financial advisor, Richard Osman from Phronesis Wealth Management. Richard, welcome.
Hey Matt, how you doing today?
I'm doing really well, really well. So let's just dive right in. Historically, how do elections tend to affect the stock market?
Well, Matt, that's a great question. Historically, the stock market tends to experience increased volatility during election years. Investors often react to the uncertainty of potential changes in policies and leadership. Now, this can lead to fluctuating stock prices as, market participants try to anticipate the election outcome and its implications on the economy and specific sectors in the stock market.
So, what specific factors during an election year contribute to this volatility?
Well, several factors come into play. Firstly, there's the uncertainty around which candidate will win and what their policies might entail for the business and the economy. Secondly, campaign promises and proposed policy changes can impact investor sentiment. For example, proposals related to taxes, healthcare, and regulation can significantly influence market sectors differently.
That's really interesting. So, are there any patterns or trends in how different sectors react to election outcomes?
Yes, indeed, Matt. Certain sectors may perform better depending, on the policies associated with the winning party. For instance, if a candidate who supports renewable energy wins, we might see a boost in green energy stocks. Conversely, if a candidate favors traditional energy sources, oil and gas stocks might perform better. Additionally, sectors like healthcare and defense can be particularly sensitive to election outcomes due to their heavy regulation and government contracts.
That's really interesting. So, how should investors approach their investment strategy during an election year?
During an election year, I believe it's essential for investors to remain focused on their long term goals rather than making impulsive decisions based on short term market movements. Diversification is key. Having a well balanced portfolio can help mitigate the risk associated with election year volatility. And it's also a good idea to avoid making significant portfolio changes, solely based on election, predictions. Instead, stay informed about potential policy changes and be prepared to adjust your strategy if necessary, once the election results, are clear.
That makes a lot of sense. So, are there any historical examples that highlight the impact of election results on the stock market?
Absolutely. One notable example is just the 2016 US presidential election, right? The unexpected victory of Donald Trump led to significant market reactions. Initially, the futures market plunged on the election night due to the uncertainty, but the market did rebound very quickly the next day, and we saw a large rally, especially in sectors like financials and industrials. These are driven by expectations of deregulation and infrastructure spending.
So, should investors be worried about potential market downturns during an election year?
Well, Matt, worried is a strong word. It's more about just being aware and prepared. Market downturns can and obviously do occur, but they are normally temporary. It's crucial for investors to maintain a level-headed approach and not, let election-related noise disrupt their long-term investment strategy. Historically, despite short-term volatility, the stock market has generally trended upward over the long term.
But finally, what would be your top piece of advice for investors as we approach another election year?
My top piece of advice would be just stay informed, but not overly reactive. Keep your emotions in check. Focus on your long-term financial goals and ensure your portfolio is diversified, to withstand potential volatility. Consult with a financial advisor if you're unsure about any changes to your investment strategy. Remember, elections come and go, but your investment horizon should remain focused on the long term.
Focused on the long term, diversification. Great advice, as always. Thank you so much, Richard, for sharing your insights with us today.
Matt, you're welcome. It's always my pleasure.
And thank you all for tuning in to another great episode of the Phronesis Perspective. Stay informed and invest wisely. Reach out to Richard and his team for a free consultation on their investment services. Until next time, remember to like, to share. And hey, hit that button right down there so you can subscribe and get the next episode of the Phronesis Perspective when it comes out. So much great advice and so great talking to you all. I'm Matt Ackerman. He's Richard Osman. Have a great day.